Good morning, everyone. Welcome to the Friday Financial Review. It is the first review of October. Today, I just want to touch upon the very recent market volatility we've had. We've had little sell-offs, is what I like to call, around the world, but nothing of serious significance in my personal view. This trend really started several weeks ago with news about a situation in China, for example, with Evergrande, which is China's second largest property developer, but of course one of the most indebted property developer with some $300 billion of debt, and they were facing default. So that really spooked the market because money managers around the world would have some form of exposure, not all of them, but certainly many of them will have exposure to the Evergrande debt. We then had, of course, the rising fuel prices, at the petrol pumps due to shortages, and also the shortage in gas, which is a bit more recent, which has created pretty much gas prices to double in a very quick time. And this really has led to a rise in inflation. If we look at the UK, the Bank of England has, should we say, predicted and anticipated spikes in inflation in the short term, and I think figures of 3.8 to 4% has been thrown around the room. Nonetheless, the recent Monetary Policy Committee has voted to keep the UK Bank of England base rate at the all-time low of 0.1%. But this is the thing about media news, isn't it? How it can be misconstrued. You look at the petrol pump crisis. Yes, it's localized to a certain area. It's not a nationwide problem. You then take the news how it focuses on the market sell-offs. But I'm here as your advisor, and for those who have advisors already, that is not myself, you should be getting similar feedback. It's to stay calm and actually look at the numbers and understand what's going on. So let's just take a look at some of these numbers, just the main benchline index. So you've got the S&P 500, reaches all-time high early on this year, some 4,500 points. Right now it's trading at 4,400, so down 2.2%. Nothing really that serious. You look at the FTSE 100. This year, it's been recovering quite nicely. I think it touched some 7,200 points. Right now, about 7,070. Again, down just under 2%. The most volatile one, the most interesting one, of course, is the NASDAQ. Now, for those that don't know, the NASDAQ does comprise of a lot of tech companies. And the NASDAQ, I think, was at its height this year, some 15,360, something like that. Right now it's trading 14,600-ish, so down 4.5%. Well, that's a slightly more significant number, but that is market shifting a little bit away from tech into energy, into value stocks. So really what we call taking some profits that was driven through the COVID crisis of last year and into this year, where tech stocks in general has boomed. For those who already invested, you should really do nothing. This is what we call noise. You've got to focus on your medium to long term. Now, most of you are already doing that. Most of you are, you're retired or approaching retirement. You've got better things to do with your life. Your funds are already in good places with good fund managers, looked after by myself, looked after by your advisors that you've got. So there ought to be no issues whatsoever. For those who are somewhat nervous, then pick up the phone, watch my YouTube channel. It's really not an issue right now, and it's not an issue for those adopting that medium to long-term view. Ask yourself, do you need to spend all your money today? No. When are you going to start spending your money? And even then, you're not going to spend all your money. You're going to take in drips and drabs, supplement income, main source of income, or ad hoc, whatever the case might be. Okay? So really, this is all just relax, do nothing. The individual components of your portfolio will take care of each other, and we, as your advisor, will of course ensure that they are still the right components to have within the portfolio. Now, where do we see things going? Well, I mentioned to you that the inflation is accelerating, home prices are increasing, energy prices are increasing, and typically central bankers do like to use, or should we say increase, their base rate to rein in inflation. We've yet to see that happen. However, something we have seen happen more recently is the increase in the 10-year gilt, that's for the UK, or the 10-year Treasury for those living in the US. These are commonly used indicators in terms of where inflation could be heading. And what's worth noting about, just from the UK standpoint, about a month ago, the yield on the 10-year gilt was at just above 0.6%. Today, 1.2%, so it's doubled. Still very low in terms of the historicals, still very low, but for it to jump basically 100% in quick time does tell us that the market is it's becoming a bit heated, but it is trying to cool itself down by these increases in yields on debt. Okay. One of the side effects, which I'll just briefly touch upon in today's talk, is that for those of you who still have defined benefit pensions, or final salary pensions, you will now see, if you've had transfer values in the past to review, and if you were to ask it again today, you will definitely see a decrease in that transfer value. We've seen it already in our business where clients might miss the deadline. But yes, the rise in yield on the 10-year gilt, in this case by 100%, from 0.6 to 1.2, has certainly paved the way for lower transfer values. Coming back to the main subject matter of market volatility, the mantra that I teach and try to instill in all my clients is, yes, forget about it, be patient, be happy, get on with your life. But also, market volatility is a good thing for those that can take advantage, for those that can create an opportunistic view. Markets are down a little bit, certain areas more than some. We have cash on the sidelines, great way to drip feed, not necessarily plow everything into the market if you have a more short-term view, but certainly an opportunity to drip feed into the market and dollar cost your investments. Okay, but for those who are not necessarily new or newish to investing and have a sum of money, but that sum of money is focused on the long term, 5, 10, 15, 20 years plus, noise. Just put it in and forget about it. If it suffers a 5% drop, so be it. Yeah. If you sit on the sidelines all the time, you're just not going to know. Just not going to know. And of course, we're still, despite inflation, we're still getting low banking interest. And there's no getting away from it. Banking interest is almost non-existent. So yes, if you want to make money, you've got to invest it. Speculate to accumulate is the old adage. It's time in the market as opposed to timing the market. That's a piece from Warren Buffett. Okay, so look, these are guys at the top of their game and they do it well. So at the end of the day, if you have cash, invest drip feed if you want to, put it all in if you have a longer term view. If you're invested, turn off on the news, go enjoy your retirement, go enjoy your nights out, your evening out, meals out and everything else. Okay, so yes, thank you for watching my video today. Thank you for your continued support. Please keep sharing my YouTube channel, sharing videos on my Facebook. I'd love to get more subscribers, of course. And of course, look, do message me about any content you might want to see. Yeah, happy to do any subject you guys want. If I don't know enough about that subject, I will go find out more about that subject. Okay. A quick thank you to all my attendees on the most recent webinar designed for those in France. We have recorded it, so let me know if you want a link to it so you can watch it over and over again. We'll be running a Spanish webinar on the 4th of November. I will put the link on here either today or over the weekend, so please register. And again, I'll be talking about the do's and don'ts about tax and tax efficiencies and so on and so on and so on. So yes, have a lovely Friday. I'm actually taking my children to camping later on this afternoon just to get away for the weekend. And I'll be up in the Bowls Club in Quesada and having coming Monday, Tuesday and Wednesday. So for those that are there, I'll see you all there. Have a lovely weekend. Take care.